Diane King Hall is looking at those earnings for us. Bank of America a little changed, and Morgan Stanley up 3%. So let's maybe go for the winner here first. Diane, Morgan sharing a little bit more with some of the investment banks maybe than Bank of America, but also obviously they're all looking pretty good.
Yeah, indeed. And I think you saw a big part of the move yesterday. So some of that may have been baked in when it comes to Bank of America. But let's dive into Morgan Stanley first. So shares are moving higher off the back of their latest quarterly numbers. They beat expectations on both the top and bottom line. A lot of that had to do with a trading revenue for Morgan Stanley. EPS was $2.22 a share. The expectation was around $1.70 for them. Revenue, $16.22 billion. Street was looking for around $15 billion for revenue, or just under $15 billion for revenue. So again, both of those numbers were better than expected. Profit essentially more than doubled from a year ago. Now, revenue jumped close to 26%, so 25.8% there. It was really, again, its trading business, and in particular its equities business, that was its strong suit. They saw a more than 50% increase in activity there. So that lined up with some of the commentary that we heard from the sectors within some of the banks that we heard from yesterday with regard to trading activity increasing. Some of them saw more of an increase from fixed income, but for Morgan Stanley, it was its equities trading business. Of course, its wealth management business, asset management, has been a big piece of its pie, and that you saw some increase there. Investment banking activity increased more than 25%. We're expecting to see more of that this year. A lot of the banks are set up. I know you were talking to Liz Ann earlier about what the financials look like for this year, and so Morgan Stanley kind of feeds into that expectation of continuing to see strength from the financials, and the setup looks good for this year for them.
Yeah, I mean, really nice to see this on earnings, when a lot of times in the last couple of years, the banks just sort of fizzle. They debut on earnings to kick the season off, and they're just kind of bleh, they just kind of show up, and nothing really happens. This is like big ramp. I mean, all these Morgan Stanley, we're getting ready to break out, only a couple bucks away. Bank of America, which shares the most business model with the regional type of like heavy lending operations, also looking good. The regionals themselves, maybe a little bit more mixed, though. Bank of America's response versus the other regionals. Take me through that, Diane.
Yeah, so first up, Bank of America did do better than expected on both the top and bottom line. EPS 82 cents a share. Again, that was better than expected. Revenue top $25.3 billion, so that was better than what the street was looking for. But more of that had to do with net interest income for Bank of America versus trading, because trading activity was essentially in line with expectations, whether you're talking about the fixed income side or the equity side. Both were just what the street was looking for. So they nailed those numbers. But net interest income for Bank of America was an increase of 3%. That was $14.5 billion, so that was better than expected. But if we get into the regionals, you start to see some of a mixed picture there. If we look at U.S. Bancorp, they had some mixed results. EPS was $1.07 a share. That did beat expectations and is up from a year ago, but revenue came in below $7 billion. So that missed the street's expectation. Excuse me. Their guidance for fiscal year 2025 for revenue growth is between 3 to 5%. So you're seeing the stock come under a little bit of pressure in the early action, or under some pressure in the early action. You're looking at, well, actually, it's increasing. It's downtrend, down about 4.25% right now for U.S. Bancorp. And then you've got PNC out with their results. PNC, $3.77 a share. That was better than the expectations, $3.30 a share. Revenue, $5.57 billion. That was also better than expected. Net interest income increased to a little more than $3.5 billion. Now, the problem, though, is the street doesn't seem to like its guidance. They're projecting a range of between 1 to 2% of a decline in revenue growth. So that's one of the challenges when we see with PNC. And then M&T with its results as well. M&T posted EPS $3.92 a share versus street expectations $3.70. Revenue $2.39 billion. Street looking for $2.33. They had net loan charge-offs of $169 million. Net interest income came in line with estimates for M&T, but again, in line is really not going to nail it. So you're seeing shares of M&T under some pressure as well. Again, with the regionals, they just don't look as strong as the big bulge bracket banks.
All right. Definite notable weakness across those. Good report there. Thanks, Diane, for hitting all those. USB down, PNC down. Not a coincidence that that's happening. And I will say that the last couple of days, we've got a little bit of yield curve compression, which the regionals don't love. And we're getting some more of that today. So it's a little bit of a, it's not a terrible thing, but it's a little bit of kind of a buzzkill to some extent for the last 24 hours of trading, because these are getting hit in a pretty real way. So there's a definite, like, big gap between the regionals and the money center banks and those that are looking for big investment banking fees coming up this year. So good report. Thanks, Diane. Very important distinction between those groups. Thanks a lot.